What if I told you that some of the most powerful decisions in America, the price of your home, the survival of major companies, even the economic fate of entire towns are shaped not by elected officials or public institutions, but by a small network of hedge funds operating quietly behind the scenes? They don't campaign, they don't pass laws, and they rarely appear in public. Yet their movements of capital can shift entire industries. The real mystery isn't just how they gain so much influence, it as how they keep it hidden. To understand this power, we need to travel back to the 1960s, when hedge funds were small, experimental financial clubs for wealthy investors. Their early pioneers, like Alfred Winslow Jones, used long-short strategies to reduce market risk while amplifying profit potential. But as globalization accelerated and financial markets became more complex, hedge funds realized something extraordinary. Mastery of the system could allow them not just to benefit from economic trends, but to shape them. The turning point arrived in the 1980s and 90s, when banks faced heavy regulations while hedge funds operated with far more freedom. Using derivatives and high-leverage tools, they took risks traditional institutions couldn't. This new environment set the stage for the event that would transform them from niche players into quiet titans, the 2008 financial crisis. While millions of Americans lost jobs, savings, and homes, many hedge funds capitalized on the chaos shorting collapsing markets, buying distressed assets at huge discounts and positioning themselves to profit from a recovery others were too devastated to join. The crisis didn't weaken them. It accelerated their rise. In the years that followed, hedge funds and private equity firms began extending their reach far beyond stocks. They bought entire companies, industries, and even neighborhoods. They acquired pharmaceutical companies and raised drug prices, purchased thousands of single-family homes and turned them into rentals, bought local newspapers and cut staff to extract profit, and took over retail chains using debt-heavy strategies that often led to bankruptcy even while investors profited. Their influence quietly reshaped everyday life. Yet with this rise came growing instability. By the mid-2010s, regulators warned that certain funds were so large and interconnected that their collapse could threaten national financial stability. Political donations and lobbying further blurred the line between economic power and political influence. Ordinary Americans began feeling the consequences. Job losses after leveraged buyouts, rising rents driven by investor-owned housing, declining access to reliable local news, and consumer markets shaped more by investor strategies than public needs. Attempts to regulate this influence often failed because hedge funds innovated faster than laws could be written. Each patch or reform created new loopholes, and those loopholes became new opportunities. Sophisticated strategies like high-speed algorithmic trading and activist investor campaigns allowed hedge funds to continue steering corporations and markets with minimal public attention. Today, the patterns are unmistakable and more visible than ever for those who know where to look. Hedge funds collectively manage trillions of dollars. A single firm can influence a company's stock price, a city's housing market, or an entire industry's future. A handful of investment groups own major slices of America's rental housing, while activist hedge funds pressure corporations into decisions affecting millions of workers. Yet most people can't name these firms, let alone describe how they operate. The quietness isn't accidental, it's strategic. And if history is any guide, the next financial disruption won't diminish their power. It may expand it. So what can we take from this story? First, true financial power often operates silently. Markets, not microphones, shape many of the conditions of everyday life. Second, when institutions grow faster than regulations, the public becomes the testing ground for whatever financial experiment comes next. Third, understanding how hedge funds operate isn't just for investors or economists. It's essential for anyone who wants to know why prices rise, why companies collapse, or why entire communities change in ways that seem invisible until it's too late. If these trends continue, hedge funds may become even more deeply woven into America's economic future, for better or worse. And that's why learning how they operate is no longer optional. If you want more deep dives into hidden financial systems shaping our world, make sure to like, subscribe, and turn on notifications because the more we understand, the less power stays in the shadows.